Welcome to Quick Bite, your fast and friendly Florida
Hello,
insurance.
hello, hello. My name is Roshonda, agency owner of the Isom Insurance Group, right here in the sunshine state of Florida. Back again for another Quick Bite episode, your fast and informative insurance industry update. It's Wednesday, hump day, October the 1st. We're into October and Halloween season. And today we're talking about something that might be quietly draining your wallet. Credit-based insurance scoring. We'll break down what it is, why insurers use it, and how it impacts your premium and what you can do to take control. So first, what exactly is credit-based insurance score? As you can see from the Insurance Journal article that's on the screen, it looks at things like payment history, outstanding balances, length of credit history, and new accounts, just like your regular credit score. But instead of predicting whether you'll pay back a loan, insurers say it predicts whether you're more likely to file a claim. Here's how it plays out. Two homeowners with the same house, same neighborhood, same history. One has great credit, the other doesn't. The difference, the one with weaker credit might pay 20 to 50% more. And according to the article, a typical homeowner with a low credit score may pay nearly $2,000 more per year than their neighbor with good credit. That's money you could be putting toward property taxes, utilities, or even a family trip. Instead, it's quietly baked into your insurance bill. And I do hear this a lot. I have customers that refer like their neighbor to me, and the quote for their neighbor would be higher. And they're like, why is the quote so different with the same company, even though they have the same exact house? They're in the same subdivision, the same model of the home that both persons have. And it always comes down to insurance score. So the better your insurance score, the better your rates. Now, is this even legal? Well, in most places, yes. Only a handful of states ban or limit credit based scoring in insurance. The other 43 states, insurers are free to use it. So, is it fair? That depends on who you ask. Insurance companies argue it helps them better predict risk. But from a homeowner's perspective, it can feel like a hidden penalty. Here's why. Two families could live in nearly identical homes, have the same income and the same claims history, just like I said before. But if one has a lower credit score, they could be paying hundreds or even thousands more in annual premiums. That gap raises the question, are we really measuring risk, or are we just adding another layer of cost that doesn't always match the actual likelihood of a claim? If insurers are allowed to use it, what can you do? And that's credit scoring or insurance score. Luckily, there are a few strategies. Bundle your policies. Auto and home can get you discounts, sometimes 5 to 10%. Shop around. Different insurers weigh credit differently. Adjust your deductible. Raising it carefully can lower premiums. Work on your credit health. Paying on time, lowering balances. It does pay off in the long run. Shopping for insurance really is like dating apps. Sometimes you have to swipe left or on your old carrier to find one that values you more than just your credit score. We've talked about the credit based insurance scoring, what it is, where it's allowed, but what can you do about it? Let's take a step back for a second and look at the other side of the argument. Insurance companies defend this system by saying it makes the market more stable. Their position is if people with lower scores are statistically more likely to file claims, then by charging higher premiums balances that extra risk. And they argue it actually helps keep rates lower overall for people with good scores. Now, whether you agree with that or not, it does explain why most insurers are reluctant to give it up. They see it as a tool that helps predict future claims. Here's the catch though. For you as a homeowner, the reasoning doesn't matter as much as the result. And the result is that credit can play a huge role on what you pay every year. And it's not just used for homeowners insurance policy, it's also used for auto. sometimes more than just your actual claim history. The score can be more than just your actual claim history. So yes, insurance will tell you it's about risk and stability, but as a policyholder, you feel it most when you open that renewal bill and see how much your premium has jumped. Let's zoom out for a second and really look at the scale of this. Even a $600 difference per year might not sound catastrophic at first glance, but do the math. Over 20 years, that's $12,000. That's money you could have put toward property taxes, a kitchen renovation, or even a family vacation. Now, if you're in the group paying nearly double, the impact is even bigger. We're not talking about 12,000 anymore. We're talking about 40,000 or more over the life of your mortgage. That's not just a line item on a bill. That's a brand new car, a college fund for your child, or a serious dent in your retirement savings. And here's the kicker. These costs often go unnoticed because they're spread out month by month in your premium. It doesn't feel like one big hit, but added up over the long haul, it's massive. It's kind of like paying for a subscription you forgot about. Only instead of $15 a month for streaming, it's hundreds of dollars tied to your credit. So when we talk about credit-based insurance scoring, it's not just a technical detail buried in the fine print. It's real money that can quietly change your financial picture for decades. So here's your bite-sized recap. Credit-based insurance scoring is widely used. It can mean huge premium differences, sometimes double. You do have tools, bundle, shop around, adjust coverage wisely, improve your credit. Now, I'll love to hear from you. If you found today's quick bite helpful, please hit the like this video, share it with friends and neighbors, and drop a comment below with any topics you'd like for me to cover in future episodes. And remember, a new quick bite episode drops Monday through Friday at 2 p.m. And as always, the information shared is for educational purposes only. It should not be taken as legal, tax, or specific insurance advice. Please consult with a licensed insurance professional about your unique situation. Thank you for watching, and I'll see you tomorrow. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.